Hello, everybody, and welcome back to Finance and Fuel, the podcast that breaks down finance into everyday language so you can make smarter choices with your money. I am your host, Lazan, and today we are tackling a topic that comes up every single time someone applies for a vehicle, and that is credit scores. You've probably heard the term, maybe even checked out your score once or twice, but do you really know what it means? More importantly, do you know how it impacts your ability to buy a car on finance? What makes it go up and down? And what the bank is really looking at when they approve or decline your application? That's what we are driving into today. By the end of this episode, you will know what a credit score is, how to improve yours, how strong it needs to be for vehicle finance, and where you can keep track of it. So buckle up because we are about to put your credit score under the hood and take a good look at how it runs. Let's start with the basics. Your credit score is basically a 3-digit number that tells lenders, the banks, how risky or reliable you are as a borrower. Think of it as your financial report card. In South Africa, your score usually ranges between 0 and 999. A low score means you are considered high risk. Maybe you've missed payments or you are heavily in debt. A high score means you are seen as reliable, someone who pays on time and manages debt well. Here's a quick breakdown. 0 to 550 is poor, a high risk. Most banks won't approve vehicle finance here. 550 to 650 is fair. Some lenders might consider you, but interest rates will likely be higher. 650 to 750 is good. You are in the safe zone for most vehicle finance applications. And 750 upwards is excellent. You will likely qualify easily and get the best interest rates. So your credit score isn't just a random number. It is the bank's way of answering the question, if we lend this person money for a car, how likely are they to pay us back? Now let's talk about what actually makes your credit score go up or down. Positive influences, the things that help you score, is paying on time. Whether it is your credit card, store account, or a loan, paying by the due date boosts your score. Low credit usage, if you only use, say, 30% of your available credit and not the full limit, the bank sees you as responsible. A long credit history, the longer you have had accounts in good standing, the better. And then a mix of credit. Having a credit card, a retail account, and maybe a small loan shows you can manage different types of debt. Negative influences, the things that hurt your score, is late or missed payments. Even one late payment can drag your score down. Too much debt. If most of your income is already tied up in repayments, your score suffers. Judgments or defaults. If a creditor had to take legal action to recover money, that is a huge red flag. Too many applications. Every time you apply for credit, the bank does a hand inquiry. Too many of these in a short space of time makes you look desperate for credit. So your score is really just a reflection of your financial behavior over time. Good habits push it up and bad habits pull it down. Okay, so how does this apply when you want to buy a car? Banks look at your credit score as one of the first checkpoints. If your score is below 550, chances are very slim. The bank sees you as too risky. Between 550 and 650, you might get approved but with sticker terms, like a higher deposit or higher interest rates. Between 650 and 750, you're in good shape. Most banks will approve your car finance if the rest of your application checks out. 750 and above, you are golden. You'll likely get the best deals, the lowest rates, and smoother approvals. But remember, the score alone isn't the whole picture. Banks also look at your income, expenses, and affordability. A high score won't help if your salary can't realistically cover the payments on the car you want. Let's pop the hood on how the decision actually happens. When you apply for vehicle finance, the bank does two main checks. Credit worthiness, that's where your credit score comes in. They want to see that you have a history of paying your debt responsibly. Affordability, they will look at your payslips, bank statements, and monthly expenses to make sure you can afford the car without overextending yourself. Here's what happens behind the scenes. They will pull your credit report to check your credit score and history. They will run affordability calculations. Basically, they check how much disposable income you have after your expenses. They weigh the risk. If your score is low or your income is tight, they might decline. If everything checks out, they will approve and set your interest rate. So a decline doesn't necessarily mean you will never get finance. It just means either your credit history or your affordability doesn't line up now. The good news, both of these things can be improved with time and effort. Now, how do you know where you stand? In South Africa, you are entitled to one free credit report per year from each of the major bureaus, TransUnion, Experian, XDS, or CompuScan. Many banks and apps also give you free access to check your score monthly. If you want to improve your score, here's a few practical steps. Pay every account on time, even if it is minimum. Avoid taking on too much new debt. Give your score time to recover. Keep balances low. If your credit card has a limit of 10,000 Rand, try not to owe more than 3,000 Rand at a time. Don't apply for too much credit at once. Spread it out. Clear up old debts or judgments. If you've defaulted before, paying it off shows responsibility and improves your score over time. The key is consistency. A credit score doesn't improve overnight, but steady good habits can move it up within months. Let's wrap it up for today's journey. Your credit score is your financial reputation. For vehicle finance, it plays a huge role in whether the bank says yes, what interest rate you will get, and how smooth the process will be. Good habits, paying on time, keeping debt manageable, not applying too often, push your scores higher. Bad habits, missed payments, too much debt, judgments will pull it down. The stronger your score, the better your chances of driving away in that car you've been dreaming about, with terms that actually make sense for your budget. So check your score regularly, practice healthy credit habits, and when you are ready to apply for vehicle finance, you will know you've set yourself up for success. Thank you for tuning in to Fuel and Finance today. I am your host Lazan, and remember, I'm here to fuel your financial journey one conversation at a time. Until next time, stay smart, stay consistent, and keep your credit in good shape.